Hello, everybody, and welcome to episode number 90 of Confessions of a Market Maker. I'm your co host, Ray, aka All Day Ray, aka Daddy Joystick, and I'm joined here by my sanguine co host, former market maker, 20 years, and current day retail trader. He's taught you how to think like a villain, he's taught you how to treat trading like a business, and he's taught you to never trust a Canadian mining company, the silverback of House Street. JJ, how's it going, man?
Good, brother. How are you?
I'm doing good, man. We got the summer here coming to an end. How was your first summer in London?
Oh, man, amazing. It was the best summer I've had in years.
Mm-hmm.
It never rains here. Contrary, no, it actually does not rain nearly as much as everybody says it does. I'm
Mm-hmm.
in London, and yeah, it was a great summer. People enjoy themselves here. It's kind of cool. You go to music festivals, and like there's like people 20 years older than me that are like having a good time, whereas in Canada it's a little different. After 30 you kind of get the 80-inch TV and watch hockey. So it's nice to be, no offense to Canadians, I love you all, but it's nice to be actually social.
Yeah, yeah, no, it's good, man. You know, you're doing other things outside of the market.
Oh
Um,
yeah. Yeah, I'll have my first Labor Day holiday since I was 14 years old, so this will be a trip this week.
Excellent.
Yeah,
How do
yeah.
you how do you find, because I always thought this, JJ, right? For myself, like whether it's, trading or really anything in life, if I become like that's all I'm doing, I don't think I like perform as well as opposed to when I'm living like more balanced. How has your trading been, or the way you're seeing the market? Have you noticed maybe like an improvement there?
Yeah, I'm definitely more balanced,
Hmm.
more normal. Like, I've actually never really lived like a normal human being because when I was on the other side, it was just so competitive for what we did that,
Yeah.
I my last holiday was 1995 before this year. So not taking a holiday in 30 years, working all the time, it's not really healthy. And this is now I've kind of actually started enjoying life a little again, since the first time since I was in my early 20s. I'm trading more relaxed. That's one thing.
Yeah.
I'm not I don't know, I'm not like as tense, which is nice because you kind of let things go. You can admit you're wrong quick, instead of and get out of stuff. You can actually see markets a little bit more. I don't know. I think you know on the other side, they used to have this thing, in the 80s, they taught, young traders in the 90s, they said, you got to get up in the morning ready to bite the ass off a bear. Like it was an aggression thing.
Yeah.
Trading psychology, if you mentioned trading psychology, you were laughed at. Psychology was a bottle of Jack Daniels and a pack of Marlboros, right? Like, there, go. If you're stressed, there you go. Like, what are you whining about, right?
Yeah.
And they would literally, like, if you said you were stressed, they would literally, uh, you were like, you were, they would just laugh at you,
Yeah. It's like
right?
you're soft, right? Like,
Yeah, you're soft. We
yeah.
eat stress for breakfast. What are you kidding?
Yeah.
You're not a real man until you have your first heart attack. And so now it's a completely different world, and we have people like Kim and Paula and all of these people, and it's better this way. We had Tom Basso on the podcast, I remember, and I was like, man, if this guy was my boss, I would have never had a heart attack.
Yeah.
I mean, it's just such a much more calmer way to go about doing business,
Absolutely.
than the
Yeah,
trench warfare business model.
for sure. I always like blending, that's what blending a mix of the two, or maybe not being on the extremes
Yeah.
of things. And I think, there's a lot to be said for like that mental toughness and that grit, right? Because you need to have that too.
Yeah.
But then there's also that, like, yeah, when you need to take a break, or
Oh
you need
yeah. Yeah.
to take care of yourself in a holistic sense. And I think there's probably a happy medium,
Right.
somewhere to be had. You mentioned Paula, JJ. Speaking of Paula, it's the last podcast. So for the listeners, it's the previous podcast we did, episode 89. Go back and listen to it. Phenomenal. I gotta say, Jay, I think probably one of my favorite to date. I really left, yeah, I'd say somewhat inspired, to, to go deeper into the mental realm. Even, when she mentioned how diligent Mark Douglas was about journaling, even just like and beyond trading, right? Just everyday
Oh
thoughts.
yeah. Right.
And I've always been a journaler, but I think it's made me think about maybe picking that up a little bit, or just going deeper into the practice of it. It's just cool just to talk to someone who was so close to Mark Douglas, right? And to get that
Oh yeah.
historical aspect.
Yeah, it's
Yeah. What
yeah,
were
it
some of
helps
the
you
takeaways
hear
you
it.
had? Yeah.
Well, I Mark Douglas was very instrumental. I mean, he's been instrumental for so many people. But the other thing that for trading psychology and trading, but he also made me a better teacher.
Mm,
Because when I started in this, you and I started, we started this room and we were teaching people, and I'd be like, come on, you know what's going on, right? People, I'm like, okay, we're going to shake the tree. We're going to do this. Now we're going to, people are like, what the hell is this guy talking about? And I'm like, I had no idea how to translate what 25 years we did in the business to make retail people understand. And watching Mark Douglas's videos and seeing how calm and relaxed he was and how he was able to simplify a concept and convey it and teach it to people so they could get it and
mm,
then make executable actionable decisions on that. That was very inspiring to me. And it was one of those things too, because Mark's older than I am, and some like his stories of being in that silver trade, when Nelson Bunker Hunt
mm,
and his brother cornered the silver market. That's pretty cool. And just, like when he got his Porsche repossessed, made me feel not bad about getting my Porsche repossessed after 9/11. I was like the same exact scenario happened. You're living in a fancy place, driving a fancy car.
mm.
It's the first time you're rolling in life, and then something bad happens and it gets taken away, how you deal with it. All of those things were very things that I had gone through in my life, and it was just really nice seeing someone older who had gone through it, made it out the other side, and like, okay, he survived, right? And he thrived after that, right? And that was very inspirational. And when we had Paula, it's almost like his spirit joined us for the podcast. It was beautiful,
Yeah,
you know.
yeah, it was. Yeah, I was surprised. I was surprised even when she mentioned that the editors or the publishers of the book wanted to exclude that story, about
Yeah.
the car getting repossessed.
Oh yeah.
But
Yeah.
I feel like everyone loves a good comeback story,
Oh yeah.
and like you said, we could relate
Yeah.
with it if Mark Douglas could be down
Yeah.
and come back. I mean, that gives people hope and inspiration, I feel.
Yeah. It's like when I was living in Vancouver, there was a promoter who was a huge promoter who got into some trouble and he ended up losing everything. And this guy was worth a lot of money. Lost everything and ended up living in the park for a year, right? And he was homeless, and then he came back and made money and did a deal. And those kind of stories I I find inspiring because we all fall, and in trading, man, sometimes we fall every day, and it's gut wrenching. So to be able to keep your head up knowing that things will get better, that's very hard for a lot of people because they're at home, they're by themselves, they don't have anybody to bounce people, an idea off of, or even of their emotions. Like, I'm having a bad day. They got to eat that all, and that's really hard. And that's why we have our room. It really helps people that way, not just from a mechanical, technical standpoint and an educational standpoint, but it allows them to kind of go, "Oh man, I don't know what I did. I traded really badly today." And come on, everyone's done that, right? And for someone to go, "Okay, well, what did you do wrong? Give your head a shake and get back in the game tomorrow." And that kind of thing, that whole attitude is very necessary in this business because one day you're on top of the world, the next day you're just taking a really hard kick to the nads, and then you know you got to be able to recover from that. You
Yeah.
got to be able to recover, and we're really grateful that Paula and people like Paula and Mark really focused on that for people. You know.
Yep. Yep.
Yeah.
And just a reminder to the listeners, if you'd like to join supportive and professional community of traders, you can join JJ and I at microefutures.com. So, JJ, last market update we did was about 2 months ago. So that puts us early July. For listeners, we're recording this on August 31st, 2022. Summer coming to a close. JJ, what have been your overarching thoughts on the market this summer?
Man, we I told people last year in November and October, I said things are going to change, and boy, did they ever.
Mm-hmm.
And it's been a roller coaster. It's been a real roller coaster. Um, we came off those lows in the S&P and peaked up at quite a bit higher, and a lot of that was driven by short covering. If you look at the market structure, and then of course we came down and started filling some of those shorts as the month closed.
Mm-hmm.
Uh, Really gonna have to really let the market tell us where it's going over the next couple of months. We do know that September, October, there's going to be a bit more. I think we're going to be in for some more volatility
Mm-hmm.
as this market tries to find, what the market's trying to do for the last week now. It's been trying to find the bid. It's trying to find where large buyers are willing to step in. And, those moves are big and they're big moves and they're volatile and people get hurt, so it's a real time. And I always sound like a nervous Nelly because I'm always telling people to be cautious, right?
Mm-hmm.
I'm always like, be careful, do it, but that's because I've actually personally, well, not myself, but my clients they've blown up clearing firms and taken down brokerage firms and put people out of business. And so I've seen the devastation and that sort of thing. So maybe that's sort of my baggage, right? But I'm like, okay, don't worry, you can always trade the next day, but you got to be alive. And
Yeah.
that's always been a focus for me, and I think that's going forward. Don't waste your bullets, and I've been working with Steve, our partner in the room, to do the setup thing for the ES, much like you guys do in equities. So
Mm-hmm.
we're only trading those A plus setups, so we're not wasting our capital, right? Or we're not wasting our bullets. So we actually have capital to trade with when opportunity comes, because sometimes these markets can just, it's a lot of times we're in pickpocket markets. A lot of times it's really choppy, and traders are like, they go long, they get stopped out, they go short, they get stopped out, and it's like, and then they get into a cycle, and that's how you get chewed up. And for longer term people, it's hard to put long term positions in this thing with huge ranges,
With the volatility, yeah.
the volatility in the
Yeah.
ranges, because we don't have liquidity in this market. So somebody comes in and drops a big buy or sell order, this thing just moves. And it moves fast and hard, and then that's it. Then that's the end of the move. So it's very challenging. It's a challenging trading market. If you know what you're doing and you're a skilled trader, it's a great market for those kind of people. But getting to that, you know, beginner, novice, intermediate, and up the ladder, that's it's going to take some time, and I think the fall is going to challenge quite a bit of us.
Mm-hmm.
It's going to be a very interesting fall as we're going forward here in this rising interest rate environment. And I'm still seeing things like, I saw that this company Seat Geek or whatever it is, they just raised $238 million. So dough is still out there, money is still out there. you
Yeah.
know
Yep. Yeah, we still
there's
got some of that going on out here for sure.
we still
Yeah.
got that going on. We got companies like Peloton losing $1.2 billion, and they're still in business. So there's still, people are still drinking the Kool-Aid still. Well, we're not completely out yet. There's still money to be made.
Yeah. Yeah. There's still some I've been seeing the pet clothing dying down though a little bit, JJ. So
Our indicator.
yeah, they indicate that but some of these it's been interesting for me, the trading equities, some of these China stocks are I mean they always act kind of funky, but
Oh God, yeah.
they've
Now,
been a little bit interesting lately as well.
now I've heard this. I don't know. Are they hooking? Are they pulling a lot of these China stocks off the exchanges?
No,
Is that actually happening?
I don't think so. There was man, there was a item of news this week. Oh man, I'd have to pull it up. It was good news for China stocks. They're something they're going to be able to. I don't know if it had to do with the auditing because you
Oh,
know they don't have to get audited the
yeah,
earnings.
yeah,
I don't know if it was something along those lines, and I don't want to
yeah.
misquote here on the
No,
podcast,
that's okay.
but I don't think they're in any jeopardy or anything, which is good. I mean, I like shorting them. Dangerous, it
Exactly.
can be dangerous at times for sure. You got to be
Yeah. Oh,
careful.
yeah. Yeah.
But getting back to the overall market, JJ, I wanted to ask you about like the volatility because I think we all know summer is a lower volume time period. But what about the volatility? Like this summer has been, unless I'm not remembering correctly, this has been pretty volatile. I mean,
It has.
we had this run up that I know people were kind of like, oh, are we going back up or like what's going on here? I know a lot of people were confused. Now we've come back down the past couple of weeks.
Well,
You do you remember summers being this volatile or
not really. And this is the first time when we went up in this last run where we went up to 4,300 on the S&P. We actually we had 13 short positions underneath the market. It was fascinating. I have never counted that many short positions, and we still have one, two, three, four, we have five underneath us, right? We have still five short positions underneath 39.50, and so that's what took the market. A lot of people got trapped um, in that move over 39.55, and it, you know, it it causes this volatility. What volatility like this is caused by is lack of size, um, money management, money in this market, and the large momentum players, they can push the ranges because market makers just do not absorb. They don't absorb inventory at every single level in size because they know there are no big buyers to turn around and sell it to. So the ranges get pushed way out of proportion.
yeah,
So you have 100-point range on the S&P in a day now is not a big deal, you know, and that's very, very scary for smaller traders with smaller accounts. You got to really, really watch your whiskers because that volatility. Uh, I think that's going to continue, because until some of these large money management firms start stepping in on the bid and start absorbing some size, it's pretty much a lot of the times this thing trades like a penny stock, with these wild swings. And that's just because it doesn't really have any shock absorbers on each side. And the shock absorbers are those size money managers. But then you look at money managers like BlackRock and Vanguard and stuff like that, and State Street. I mean, you've got 1 billion shares of Apple. How much more Apple can you possibly buy, right? Like, they got Apple coming out their ears. Like they can't buy anymore.
yeah.
So it's going to be really interesting how this all unwinds over the next coming years. I'm really quite fascinated. I've never seen markets like this.
Yeah, yeah. I I pay attention to the SPY during the day, JJ, because
Yeah.
sometimes it helps like inform,
Oh yeah.
maybe like, hey, maybe I should stay out of shorts now, or et cetera. But sometimes like when I'm looking at it and it'll like just be going up and down through VWAP, it'll be like looks like it's trending down, then a big green candle up, and I always think I'm like, man, how are these guys trading that over there? Like
Oh,
it's it's got to be tough, man.
it is.
And
It
like you said
really
with
is.
these ranges, what have been some of maybe the advice you've been giving to the people in the room?
What I've been telling people is to trade from stop to stop
Hmm.
for smaller accounts. Larger accounts, we've been successfully doing stuff like building positions out around structure, which has really been cool. And there's a couple of new things that I've been trying out. And me, like, when it comes to using new tools, I'm very apprehensive about it. But we've been incorporating things like Delta. And then, for you footprint chart users, we've incorporated that onto a TPO chart. And it's been just absolutely wonderful because we've been able to really sort of drill down on where the buyers are and where the sellers are, and that's been really cool. and to be able to trade between them. And we're getting good results in the room. It takes a little while. You have to be a little bit more careful about your trades, plan them out a little bit, be a little bit more. And the other thing is, we're really learning to be at peace on missing a trade. Because a lot of people, they'll miss a trade, then they'll chase it, and then they'll, because it's volatile, it comes back the other way. And being able to go, you know what, I missed that, no big deal. There's another one coming, and get into that headspace has been really helpful.
It's huge. It's huge.
Yeah, it's been a challenge though.
Yeah, of course. It's always a challenge, right? Like
Yeah.
I think no matter how you know we're still human, we're gonna like be little like
Oh yeah.
feel a little, disappointment or aggravation.
Oh,
And I know I
totally.
have like a little bit because you were mentioning like the choppiness, right? And it's
Yeah.
when we talk about capital preservation, and sometimes this choppiness can drain the mental capital,
Oh,
right?
definitely.
And
Yeah.
preserving mental capital is a huge thing too. And I'm just always trying to find like a good balance,
Oh yeah,
where
totally. Like
you
some of
don't.
these,
Mhm.
yeah, definitely. Trading some of these choppy days, like it feels like, you're like sparring.
Yeah.
It's
Yeah.
like,
Yeah.
like if you're fast trading and chopping, it really feels like after that you're like, oh, okay, you know what? I need to like chill out. Heart rate's up, and it's like it feels
Yeah.
like I did a few rounds here.
Mhm.
And so yeah, you got to really keep that, not only your financial capital, but you're right, your emotional capital,
Mm.
and uh, your ability to sometimes, a lot of people are like, oh no, you got to keep trading and stuff like that. And sometimes you do need to take a little bit of break, walk away from it, come back, and let your mind kind of recharge a little bit.
Yeah.
I find that really has been helping this summer too. Because now I'm living here. Um, it's not like, in here you can, I get up and I walk around, or I'll, hop on the subway and go to Canary Wharf, which takes like 5 minutes, and clear my head, and then come back and trade, and then I trade better. Which is something which seems counterintuitive, like, oh, don't leave your seat, you might miss something. Sometimes I think your brain needs to, like, you know, switch off from that for a little bit, and, go look at, like, like, do what normal people do, you know,
Yeah.
and then
Yeah.
come back.
Yeah, because what we do like isn't normal,
No,
right? And if you
no.
get yourself in that like negative
Oh,
feedback loop in your brain, you're not going to perform optimally. And that's one of the things I took from speaking with Paula last podcast. And it might have been like some might say extreme, some of like oh, like Mark Douglas was hitting three red lights in a row, he's not going to the hockey game, right?
yeah,
Or she spilt the coffee, she's not trading
yeah.
that day. It might be extreme to some, but I get the point she was trying to make. And it's
Oh, yeah.
we're in a performance sport, and you have to be performing optimally, you have to be there mentally. And that's something I've been really trying to, maybe I won't take it to that extreme as they
Yeah.
did, but there's a reason why Mark is revered the way he is, because he did take it that serious.
Oh,
And
yeah.
I think even myself, I thought I've always taken it serious, but maybe you know, yeah, just it's got to be taken serious. We're in a performance activity here.
Oh, definitely. And like we always say, it is a business, right? So,
Yeah,
a lot of these trades, if you think of trades too as business decisions, or a series of trades as, you're trying to accomplish a business agenda. Um, if you start thinking like that, it kind of helps put things in perspective. And, like, Paula was saying, how to have a business plan, and,
yeah,
your traders are small business operators, so, you should have a business plan. And yeah, there's a lot of the planning and the discipline and that meticulous attention to detail in retail trading um, that was my hardest thing, you know, when I started out, man, because institutional trading, and you're controlling order flow. You're like,
You had it
let's
easy, JJ. You had it easy,
yeah,
man.
just let's knock this thing down a little bit and see who flies out of it. And okay, now let's clean it up. You just did things like that. You didn't even think about it. Now you have no control, right? And you can't cheat and you can't do it, so you've got to be disciplined and risk management and discipline and all of these things and waiting for the trade and setups and all of this stuff. It it does take that's why I have a lot of respect for people who trade retail and do it well, because there's not many who do.
Mhm.
And it's the learning process is so hard that most people won't persevere till the end to break through those hard times where just nothing is going right. It doesn't seem like you can understand it, and that is something that you know I really learned a lot. You don't think you're going to learn a lot as an older person, but you do. This business will teach you a lot about yourself. It's quite amazing.
Yeah, it is. It's truly fascinating. JJ, has there been any particular news items or headlines that you found noteworthy this summer that you want to speak to?
Um, I'm just kind of looking at deal flow and seeing how the SPAC thing is sort of kind of fizzled out.
Yeah, I saw,
Um,
you
you
know, just
know,
speaking of the SPACs, JJ, I think, and I might even sent it to you. Oh, I think since last year, they're like on a majority, I think down 80%. Don't quote me on that, but it's something large.
oh
Um,
yeah,
I saw a few pop up this week on some of the scanners, but
oh
man,
yeah,
have they gotten crushed, huh?
yeah. I mean, the other thing too is, as somebody who used to run boiler rooms, right? And has really knows how retail buyers think. We've really, taken a lot of these retail people out to the woodshed, and these GME type meme stocks. We've jammed people into these things. And, I don't want to say that I don't want to get, hate mail from, I don't know, what are they called? Apes or
Yeah, apes. Yeah,
I don't know, apes or I don't know what the hell's going on. Kangaroos, whatever they call themselves. But, sometimes there's just stupidity in buying something. I mean, these some of these companies, they don't have a cure for cancer. Like it's a movie theater. Like seriously, like give your head a shake, right? A little common sense for God's sakes, people. It's like it's a series of movie theaters that is sucking money. I mean, the other thing people don't realize is, I mean, if you look at companies like Piton, right? And these Palantir and Piton type companies
Mhm.
where the earnings aren't that good. How are they keeping the lights on? They're keeping the lights on by selling stock, right? I mean, their business, like your business might be making a bicycle that's 4 grand, but how are they keeping the lights on? They're keeping the lights on by selling S8 stock. They have 200 million shares of S8 stock in Peloton,
Yeah,
right? So that's how they're funding these things, with S8s and fault flow through offerings and whatever secondaries or so they're not actually keeping the lights on through the business operations.
right.
They're keeping the right lights on by selling stock at a discount to institutional investors and then taking that money and continuing their business operations. So it's like a big daisy chain of debt and dilution where, the stock just keeps getting pressure. And people don't realize that. They don't realize, like, don't you ever wonder, like, how can a company lose $1 billion in a quarter and still pay their electric bill? Like, riddle me this, right? I mean, come on, think about it, right? Like, how do you lose that much money and still stay in business? The money's got to be coming somewhere. Like, the executives aren't, they're not taking pay cuts, right?
Yeah,
And like Gordon Gecko said, you got to look at some of these companies. The insiders own less than 2% of the stock. And they're like
yeah,
they're not really putting their money where their mouth is,
yeah,
right?
yeah.
If they were such believers in the stock, you'd see insider ownership at 80% or something like that.
Right, right.
People
And
loading up on their own paper, but
yeah, and these are things you've been talking about since we started
oh
this
yeah,
podcast. I remember when the SPAC craze was going on.
oh yeah,
I remember when, this whole, GameStop, GME, and we were like, hey, like we're pro retail trading, but just we got to
Yeah.
do it the right way though, right? Not just
Oh yeah.
ape into these things. And it's fascinating to me because people if you're a new listener, you can go back and listen. Like these are things JJ's always talked about. It's there's parts of this game that do change, and then there's part of it that humans are humans, right? Like psychology. I mean, we don't
Oh
really
yeah.
human psychology. The psychology part doesn't change,
It
and
it, it doesn't. And
yeah,
this is this markets thing is there's nothing new in the stock market.
right,
I mean, this has been going on for hundreds of years. You know, the only thing is now that we have people go, oh, but it's all algos, and I'm like, no, algos execute a business model, right? There's still, it's a market. You buy a bunch of cheap crap and you sell it at a higher price for a profit, right?
yeah,
Like if you're selling shoes or wigs or rugs or spices or, in this case, worthless paper, you know, uh, that's what it's all about. Grab a bunch of cheap crap, mark it up. It's like they used to say on Seinfeld, bad lighting and cheap fabric. That's what moves inventory. It's I always think I'm always like thinking like a seller, right? I never think like, oh, I should buy this. It's like, oh, wow, they sold a lot of stock up here. It's those kinds of things. I'm like, yeah, wow, these guys really got liquid on this.
yeah,
They got rid of $3 billion worth of stock in a day. Wow, that's good for them. And so that's what you should always be thinking. Who's selling you what you're buying, and
right.
why are they selling it to you? Well, because they're trying to get liquid. And you are their exit strategy. So make sure that if you're buying something that it actually has a chance of going higher,
Yeah,
right? You
don't
know?
be exit liquidity. Yeah, it's funny.
Yeah.
I always joke with people, JJ. But I think there's some truth to this. Yeah, I mean, I really do think there's truth to it. Just me, learning from you, and you know eh, all the colorful stories, and what you've done before retail trading has got me so goddamn short biased, and why I only short.
Oh, yeah.
And it's like I can't help it sometimes. And we're ones that like we don't trade off of the news, we don't trade off of headlines. But it's hard for me sometimes when I see a press release on one of these BS companies, and I'm like, oh my God, they're just doing this to exit some shares,
Oh,
to
yeah,
exit their
exactly.
position. And I'm
Right?
like, I'm just waiting. And so I will, in a sense, use
Yep.
some of these things because I'm like, oh, that's
Oh,
total
yeah.
BS.
And I know, going behind the scenes, that press release has been coerced by a large investor who's long this stock,
Yeah.
who's calling the CEO and going, "Hey, we need news. Put something out,"
Yeah.
because, a lot of people have never sat across the table from somebody who owns 30, 40, 50, 100 million shares of the stock that you are working on, and the pressure that these people put on you, because they're like, hey, we need some news, right? They're not, they're not holding this thing forever. They're not like BlackRock with 7, 8 trillion dollars, and they're going to hold it for 30 years, right?
Hmm.
They want to get it in and off their hands, and they want to be liquid so they can go on to the next deal, buy cheap stock and sell it at a premium, right? I mean, so they're pushing these CEOs to do what they want. And the CEOs, of course, like, these guys are keeping them alive by investing in the company, and so they're beholden to them, right? So sometimes when you read these press releases, I don't want to sound like a but I know, because I used to write press releases,
Yeah.
right? Especially like when you can't find the CEO, or he's been on a 3-day bender, on a diet of Prozac and Jack Daniels, and he's been hanging out at Magic City for 3 days, and you can't find the bugger. They're
Yeah.
like, JJ, you got to write the press release. I'm like, oh man, right? And
Yep.
then you find this dude, and he's like Chris Rock in the chicken coop on Friday. He's hanging out in his closet, twitching, and you drag him out and go, okay, put out some news, right? And if you think that's just penny stock world, man, you have no idea
Hmm.
how many of these legitimate companies are run by like complete sociopaths or psychopaths, right?
Yeah.
Like you'll see, it just, I mean, look at the guy from WeWork. I mean, he's taken down people for billions of dollars, and now he's raised another couple of $100 million. It's as long as we have cheap money in the system, people will get away with murder.
Yeah, I was gonna bring that up to you. I how did this guy still get a ton of money during this
This
time
guy,
as
you
well,
know,
right?
I grew up in the '70s with cults, right? And I see a lot of these CEOs acting like leaders of cults, like guys like Adam Newman. And I know that's controversial to say that, but they get these followings of people who are like,
Yeah.
I don't know what it is. It's like, they get this messiah complex, and people just lose you know, all sort of like common sense goes right out the window, right? And they'll invest in these companies, and these guys are like, they're completely taking advantage of people, right? And nobody really spots it, you know? So like, I mean, you could see what happened to SoftBank on that deal. I mean, they lost billions,
Yeah.
and that's, it's you see these sort of crazy events happening, and then they come back, right? You lose all that money and then you come back. I mean, he didn't even take, 5 years off. He was back right away raising money, right, for something else. It's like people have such a short memory these days. And I think that's this low interest rate environment is just it's spawned a lot of junk deals, and it's a lot of stuff that, if a company was losing $4 billion a year, it would be a bankruptcy, not an IPO, right? Now we just pawn it off on the investing public. And I don't mean to be negative or anything, but folks, remember there used to be that term buyer beware, right?
Mm-hmm. Mm-hmm.
It still exists.
Yep. Yep. Oh, and it was you meant to say Chris Tucker in the chicken coop.
Yeah, yeah, in the chicken coop, right?
Yeah. Yeah. You said
Right?
Chris Rock. I know what
Chris
you meant.
Rock, yeah,
Yeah, yeah,
yeah,
yeah. Chris
you
Tucker.
know,
Yeah, great
yeah,
movie. Great
yeah,
movie.
you
Um,
know.
what else was I gonna say? Yeah, I guess anything, what should we be looking out for this fall, or what are you looking out for this fall?
I,
Anything specifically?
yeah, I think for longer term investors, start looking for areas where these large funds are going to start stepping in again. Um, I'm not seeing it in the charts, but uh, that sort of thing. And uh, for longer term investors, try and look for stocks that have been cleaned out and that are on the run back up. If you are a long term investor, I would really, really advise you to. There's a difference between a trader and an investor, right? Traders are, into their technical stuff and they have their setup. And if the price action violates that setup, then they're out of the trade, right? Because that's the risk management. But investors, if you're going to hold on to a company and you actually believe what they're saying, you better read the SEC filings and find out, peel back the onion and find out what's really going on in that company, because you're putting your hard-earned money into that company and as an investment. So you better make sure that they're not taking that money and having a good time with it instead of, using it for business practices. You make sure that that CEO is fiscally responsible. Make sure, call the company, talk to their investor relations people. Like, you'll look even at Apple. Apple doesn't even have a 1-800 number. They make you pay to call them, right? So things like that, it's like you got to call them, you got to spend your own dime to call them. They don't even have a 1-800 for investor relations, right? So they really, go and bug these people who run these companies. It's your money. And if you're going to be an investor, make darn sure you know what you're investing in, and do the research, right? Yeah.
And do the
And
research.
yeah.
Yep. It's funny, man. You just a bit with the CEOs, man. Magic City. Just I'm like,
Oh,
the Safada. I just think about all the degenerates I know. I'm like,
oh my God.
just imagine when you're saying this. I'm like, man, these guys are running
Oh,
companies.
these CEOs, it's just people have this misconception that these straight upright you know
Yeah.
citizens, and they're because traders get a bad rap. The CEOs, my God,
Mm-hmm.
because I've done 200 deals, and I've been around more CEOs than you can shake a stick at, and I'm telling you, man, these guys they're a trip, and ladies too. Sometimes I'm not going to discriminate. They'll
Mm-hmm.
be the company won't be making any money. The employees are not getting paid, and this guy and these people are rolling up in a brand new S class, and they've just been to Ferragamo and bought the $1,000 shoes.
Uh-huh.
You just do a 20-30 million dollar financing, and next thing you know, they're wearing designer suits. They're not and the ladies aren't buying dresses at Dress Barn anymore. They're in Prada. And so it's like, really, so what and then 6 months later I need another 30 million, right? Where did it all go, right? One of these days, and I know I sound like somebody from the Waltons from like 1832 or something, right? But one of these days fiscal responsibility is going to have to come back. Those two words have been they've whistled through our empty heads in the last sort of 2 decades. Nobody really cares. Like, how much money did you spend and what are your net earnings? Right? Okay, so you made $1 billion, and you only took 200 grand to the bottom. Where did all that money go? Like, you know, where's the dough, right? Gross earnings, net earnings, right? Like, oh yeah, well we had expenses. Well, it must have been some party, right? Where'd all the money go? Like you look at some even big companies, like from their revenue to what they actually take in.
Yeah.
You dig through that and you'll see, there's a lot of corporate waste out there. There's still a lot of corporate waste.
Yeah.
You know,
Fascinating. So, all right, everyone, that's going to conclude today's episode of Confessions of a Market Maker. If you guys enjoyed this episode, please rate and review it for us. And if you'd like to join a supportive and professional community of traders, you can join JJ and myself at microefutures.com. So for the gorilla of House Street, I'm Paulie Walnuts. You stop, so.
have a good night, everyone.